Houston, we have a problem. Yes, we do indeed have a problem. I want to tell you guys exactly what's going on here in the market, some issues that are definitely going on and how they could get actually a lot worse. And I want to kind of explain all this into detail. Let's just jump right into it. As always, make sure you check out FTX US, first link in the description down there. Get up to $100 of free crypto. Use my code HOLYSMOKERS as your referral code, okay? So obviously Netflix, everybody's looking at this. I think, regardless if you care anything about Netflix stock, every single person in the market is looking at Netflix stock and is scared. Netflix is a stock that was already getting hammered and absolutely devastated. And this stock is down, anywhere between 35% and 37% consistently throughout the trading day. And, that's just like a move that you hardly can even consider in market caps that are like $100 billion or more than $100 billion. And this is absolutely causing people to freak out in the market, Wall Street to freak out, because this is a sort of move that you're like, what is this happening? Usually if a company misses earnings or something like that, you should usually think like, oh, maybe my stock will be down 5%, 10%, maybe if it's really bad, like 15%, 20%, right? 37% on 100 billion plus. This was a $140 billion market cap or something like that yesterday. That sort of drop is shocking, absolutely shocking to investors. Now Netflix stock is now down 65% in the past 6 months. Think about that for a moment, right? 65% of this stock's value has been lost in a matter of 6 months. So it's not like it took a long period of time for this to happen. It took 6 months and it lost 65%. So imagine, 6 months ago today, let's go back in time, and you went ahead and you put $100,000 in a Netflix stock. That $100,000 is now worth $35,000. $35,000. You could kind of understand and kind of get there if you're buying like a really speculative stock or like a small cap stock or something like that, or something that's, like a sketchy business model or something like that. Like that's kind of what you would expect. Like, oh yeah, I'm taking a big risk and I might make a potential huge reward. But that's not the type of thought process that goes in with owning Netflix. Like Netflix is a worldwide known brand. This isn't like some sketch like stock or something like that. You don't buy a Netflix stock and expect to lose 65% of your value in 6 months. 180 trading, less than 180 trading days of stock is lost at. That's just absolutely historic. And here's where things start getting a lot worse and a lot scarier, okay? This is not just bringing down Netflix. This is bringing down a ton of other massive market cap companies as well. Look at Shopify, a stock that's already been devastated. This stock is selling off over 12% here today. And you look at Shopify and you say, like how much more can this stock get hit? I mean, this was a stock that, if we go back 5 months ago or so, this was a stock that was $1,700 and something a share. And here today it's 500. And then you start to think, man, what if hypothetically Shopify doesn't quite come in with good numbers? Is this stock going to a 400 level, a 300 level? That would be, levels the stock hasn't been at in years and years. It's already at a multi-year low now. Shopify stock has lost 64% of its value in a matter of 6 months. I mean, these moves are absolutely incredible and insane. The market cap's down to $66 billion for this stock now. And, we'll get into the kind of the bigger portion of this in just a moment, but this is definitely a sign that investors are scared out of their minds, that they're like, Netflix just lost, dropped that much. I got to sell out of my shop as well. PayPal, same exact fate, down 8.4% on no negative news for the stock here today. This has already been a stock that's been devastated. It's already at multi-year lows, right? And this is a stock that's down 8.4% because investors are looking at this today and they're like, if Netflix was already down huge going into earnings, who's to say PayPal can't go down more? And so people are like, what if PayPal goes down 36% after earnings, right? And people just start getting very, very panicked in the market, right? And, it could be completely just crazy in the mind to even think like these stocks can go down more, but it's always a possibility. And, a lot of folks looked at Netflix and like, it's probably around a bottoming out process, and then it drops 37%. People are like, I guess it was nowhere close to Netflix. And when it comes to Netflix, here's the worst part with Netflix specifically. Their next quarter is supposed to be far worse than this past quarter. They guided to lose, I think it was 2 million subscribers. So Netflix has gone from a company that was a massive growth engine that's bringing in all these subscribers to losing subscribers. Oh my gosh, that's like end of the world. And that scares every single person that's in any sort of a big tech stock now, right? Look at Meta. This stock's already been hammered, and now it's down another 8% here today, down 41% in the past 6 months. I mean, let's not forget this is a company that owns Facebook and Instagram and WhatsApp and Oculus and has an unbelievable diversified business model and has billions of users. But in this sort of market where you have a lot of fear, right? I mean, you can't get down to a PE cheap enough. I mean, it's at a 14 PE for Meta. Are you kidding me? A 14 PE? And the market's still not satisfied with that because the market is scared. Flat out scared of what's going to happen here, okay? Now, here's the much more dangerous part of what you're seeing right now in front of you. Here's that next part that's even more dangerous and what I think is potentially going on here as well, okay? Margin calls. So what I think is transpiring here, okay, and why this could get even worse, we'll get into in just a moment, but margin calls, all right? So a margin call is essentially, you're investing on debt, right? And, essentially, if you're a more dangerous player, you like to invest on margin, right? Or trade on margin, whatever you want to call it. And so you start margining out. Well, the problem is a lot of folks margin out in some of the similar stocks, right? And so if you are margining out, let's say in a Netflix, you might also be margining in Facebook. You might also be margining in PayPal, in Shopify, because a lot of these stocks are usually the traditional growth stocks that people like to play if they're into big tech stocks and they're into those big growth companies, right? Then you kind of have your own other sector, which is like Apple stock and Microsoft and Google, and those kind of trade a little bit together in similar valuations and things like that. But Netflix, Nvidia, Facebook, PayPal, those stocks are kind of their own little subcategory because they're usually the higher growth companies that are seen as a little more dangerous plays, but man, they got that big upside and they could outperform over the next 5-10 years, right? And so when you have a Netflix go down today, 36%, 37%, people are getting margin called today, okay? And it's not just individual investors, it can be funds as well. So which means essentially they got to sell off other positions as well to meet that margin call. Because imagine you were, pretty heavily on margin going into this, and then you had a big position in Netflix, expecting that baby to start coming back and go back to $400 level or $500 level after these earnings, right? And now it's at $200 level. You just got margin called. And now you're in a situation where you need to dump out of your other stocks also that you're likely owning, which is a Meta, which is a PayPal, which is a Shopify, Nvidia, maybe Tesla, right? The other higher growth companies in that space. And so that's the most dangerous thing. Now, the good news with that is it's a deleveraging of the market, right? If you have a bunch of people get a bunch of margin calls and people cashing, and selling, you kind of have a deleveraging of the market, which I think is healthy for the stock market overall. But we can't deny the fact that that's going on, and it hurts investors in a massive, massive way. And this is why when the market contracts really, really quickly, this is why the moves are so epic and why it happens so fast. A lot of people, try to like, wow, these stocks really lost that much value that quickly. Did the company really go that negative? Sometimes it did, right? In a Netflix situation, it's pretty darn bad there. If all of a sudden they're talking about losing millions of subscribers, that's really, really bad. But in some of these companies' case, right, the story is just not as exciting as it once was. But yet it loses 50% of its value, 60% of its market cap. If people are getting margin called, they don't have a choice, regardless if it's a great deal, regardless if Meta's an insane value here. Folks, if they're getting margin called, they're like, I gotta cash, man. I gotta cash. And then you got the other people that are just flat out scared on Wall Street. They're looking at that and they're like, dude, Meta could go down 37% in earnings. PayPal could go down 37% in earnings, right? And so you had this kind of whole panic situation. Some is forced selling and some is what I call selective selling, okay? Now, the next part of this on why it could get even scarier and worse potentially here. First off, I thought this was just worth mentioning. Netflix, this is such a big disappointment that it brought down the entire NASDAQ today. While the Russell's up, Dow's up, S&P's been up most of the day here today, it literally brought the NASDAQ down, okay? But here's the bigger issue. You have three big tech stocks that have been holding this whole show together, okay? Now, why Facebook's been devastated and Meta's been devastated and Shopify and Netflix and many of the big techs have been absolutely obliterated, right? Square, those stocks have just gotten destroyed, like literally destroyed. Meanwhile, you've had three stocks holding up this whole show. Those three stocks are reporting earnings over the next few days, and one of those is within a couple hours of this, okay? Now, why this is very, very scary is you're looking at a stock like Apple. This stock in the past 6 months is up 11%, which is absolutely amazing, okay? I mean, when you're looking at countless stocks over the last 6 months that are big tech down 30, 40, 50, 60%, and you see a stock up 11%, it's like, bravo, Apple, you have done yourself well, okay? But Apple is the biggest risk to the entire stock market right now. And the reason being is Apple, one, is the biggest market cap out there, but this is the one that's been holding the glue together, right? One of the three stocks that's been holding this whole market together, from like the whole S&P 500 and the whole NASDAQ dropping in a much bigger way, and the NASDAQ going back into bear market and the S&P approaching a bear market or something like that. This baby has been holding it together, right? They reported such an amazing last quarter that you couldn't drop this stock. Like, the quarter was so insanely good that you just couldn't sell the stock off. Everything was unbelievable. It was an A++ earnings, okay? If Apple doesn't come in with that A++ earnings this time around, the baby is dropping. And when Apple drops, it drops the entire market because it's such a big value. It's such a big market cap, okay? So they have to, literally, Apple is on walking like a tightrope right now. And I'm telling you guys, if Apple does not report an A+ quarter, they're falling and the entire market's falling more, okay? And especially when we're talking about that, it's really around big caps, because that's what really gets affected very, very negatively. So we're basically need Apple to report an A+ quarter. If they don't, the baby's dropping. And so if they just report a B quarter is not good enough in this sort of market. A B quarter will drop Apple. And if they miss earnings, oh boy, okay? If they miss numbers, that's a whole other situation there, right? Well, two of the three stocks have been holding this market together. Tesla, over the past 6 months, Tesla's up 13%. I mean, that's just absolutely amazing. It's been doing so dang well. Tesla's reporting within a couple hours of me recording this video. Tesla's going to need to come with an A+ quarter. If they don't come with that A+ quarter, this baby's dropping as well, right? Which could drop even those growth stocks even more, because remember, a lot of the people that are in Tesla are in some of these other growth stocks as well, like the Nvidias and AMDs and those sorts of stocks. And so there's another one that Tesla has to come in with perfection. If you don't come in with perfection, you are dropping in this market. Bottom dang line, okay? The folks have no patience, no long-term vision in this market right now. This is not that sort of market. There's a sort of market where people are just, you better give me perfection or I'm out of this stock. And that's the sort of market we're in. So Tesla's is under the gun big time. Nvidia, I think, is the second biggest risk to the entire market. I think Apple's the biggest risk to the market. I think Nvidia is the second biggest risk, okay? Nvidia has been holding this show together as well, just like Apple and Tesla. It's only down 3% in the past 6 months. That is amazing performance. Like I said, we have countless stocks down 20, 30, 40, 50, 60% in the past 6 months. So only being down 3%, you win, Nvidia, okay? But Nvidia, I'm telling you, is a massive risk for the entire stock market right now if they don't come in with an absolutely incredible quarter. If they don't come in with an absolutely incredible quarter, that one could easily fall 10 to 20%, okay? And not only does their current quarter have to be incredible, their guidance has to be incredible. And if it's not, that baby's falling, and that will bring down AMD, that will bring down Intel, that will bring down all the semiconductor stocks, that will bring down a bunch of other big techs, that could cause more margin calls, that could get really, really ugly really, really fast. And the risk with Nvidia, okay, we have a big problem here, okay? Nvidia and AMD GPUs are returning to shelves and prices are finally falling, all right? So if you don't know, for the last several years, there's been a huge boom for Nvidia, AMD, and this is part of the reason why their stock prices have gone crazy, where there's just been overwhelming demand. They could price at like whatever the heck they wanted to price at for their products because they had that much demand, right? Everybody being at home, wanting to build gaming PCs, all those sorts of things. And it was like, with the supply chain problems and things like that, it was the perfect storm where Nvidia and AMD were in a huge position of power and could, charge almost whatever they wanted for their products, right? Well, here's the issue. That those days are starting to leave us, okay? And somebody in the private stock group pointed this out to me actually a few weeks before the mainstream media kind of picked up on this. The Verge and all the big outlets are starting to pick up on this, but they actually pointed this out. They're super in the gaming industry, and like they pointed this out a few weeks ago, right? And so Nvidia and AMD, if all of a sudden the demand starts slowing there, people are going to flood out of those stocks like it's nobody's business, right? And if they're looking at prices starting to fall, the demand's not quite there, and their growth starts to disappoint, those babies are dropping as well, which will drop, once again, all adjacent stocks in the market, right? And so this is an absolutely incredible risk to the market, especially in terms of the big companies, right? Now, in terms of me personally, I don't mind if we go through a very tough earnings season, right? I don't mind it if Tesla stock goes down. I don't mind it if Apple stocks goes down and Microsoft falls and Nvidia falls and those sorts of things, because I look at the market and the market feels to me like we're in no man's land right now. I've been doing this for 14 years and I can kind of like get a vibe from the market. And the vibe the market's given me right now is it has no freaking clue where it wants to go, okay? It doesn't really know if it wants to go down, doesn't really know if it wants to go up. And the reason being is you had small caps and mid caps get absolutely killed the last 6 to 7 months, okay? Just about everything mid cap and small cap related, devastated, okay? Now, that's not enough to really wake up the entire market. In order to kind of really get a true bottoming of the market, you kind of need everything to have been hit. And so when I go back to December of 2018, right, we didn't finally bottom in the market until everything had been devastated. You kind of got to get to that point where everything gets just destroyed and you can finally get that bottoming out process in a breath of fresh air, essentially, okay? If we go back to the March of 2020 crash, everything fell like a rock. Everything got devastated. If we go back to the 08-09 crash, everything at the bottom had gotten devastated. And so in the market recently, it hasn't felt quite right because most stocks have been absolutely obliterated, but there's like certain stocks that have been holding up pretty good. The Teslas, the Apple, Nvidia, some of those stocks, right? Oil and gas stocks. So consumer staple type stocks. So you've kind of had those stocks holding it together while like 80% of the market just feels absolutely obliterated, right? And you cannot really get a true bottoming out in the stock market until you really get everything's gotten hit. You can't have like, oh, well, we hit it out over here. Everything ends up getting hit by the end of the day, right? And so if you go back to the March of 2020 crash, if you go back to December of 2018 crash, if you go back to the 2008-2009 crash, in those sort of scenarios, by the end of it, everything had been hit. It didn't matter if it was Coca-Cola, it didn't matter if it was Johnson & Johnson, it didn't matter if it was Apple, if it was Google, everything had been hit. And so until you get to that moment, it's hard to say, okay, now we can finally have that bottoming out process and have glorious days in the future. And so that's why I personally wouldn't mind it if a lot of these stocks that have been holding up well get absolutely slapped this earnings season. We'll see what happens, as always. Hope you guys enjoyed this as always. Make sure you check out FTX US down there in first link in the description down there. And let me know what you're buying out there in the market. Love to hear from you guys as always. Much love and have a great day.